You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
This is the Options Industry Council's Wide World of Options. Before we start today's show, investors should know that options involve risk and are not suitable for all investors. You should not enter into an options transaction until you have read and understood the risk disclosure document, characteristics and risks of standardized options. This brochure is available by visiting www.optionseducation.org or by calling 1-888-OPTIONS. OIC makes no recommendation with respect to any financial firm. OIC does not make any warranty as to the accuracy, usefulness, timeliness, or the continued availability or existence of information created or maintained by others. Multiple leg strategies involve multiple commission charges. Opinions and strategies expressed by others are not necessarily those of OIC, nor does OIC endorse, warrant, or guarantee products, services, or information described or offered by such firms. Commissions, fees, margins, interest, and taxes have not been included in any of the examples used in this show. These costs impact the outcome of all stock and options transactions. Consult your tax advisor about any potential consequences. None of the information presented in this show should be construed as a recommendation to buy or sell a security or to provide investment advice. Welcome to the Options Industry Council's Wide World of Options. OIC was created in 1992 to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. OIC offers a variety of resources to those interested in learning more about options, including live seminars, webcasts, and podcasts. Check out www.optionseducation.org for more information. Now here's your host, OIC's Director of Retail Education, Joe Burgoyne.
Welcome to OIC's Wide World of Options. Thanks for joining us for today's show. Let's get started with industry happenings.
It's time to get a handle on the latest developments from the world of options. It's time for Industry Happenings.
We're happy to take a few listener questions in today's industry happenings. Butcher Boys asked the following question. What option strategy would you say is best suited to people with absolutely zero knowledge of options? I'm going to repeat that question. What option strategy would you say is best with absolutely zero knowledge of options? Well, Butcher Boys, I have a strong opinion on this one. No option strategy makes sense without first acquiring some options knowledge. The good news is you've come to the right place to acquire options knowledge without spending any of your hard-earned money. Your commitment will be the time you spend to prepare yourself to begin to understand options. So go to our website at optionseducation.org, click the Getting Started drop-down, which will take you to a list of offerings on the left side of the page. A great place to start is the MyPath assessment test. Take the 20-question quiz, and following that, we'll download option lessons to you at the appropriate level. This program can take you from basic to intermediate concepts, and you can review the lessons online as often as you'd like. Additionally, you'll see other choices on the Options Education program page, including a course catalog, podcasts, videos, and more. So Butcher Boys, as I said, you've come to the right place, optionseducation.org, but please, please do your homework before you get investing in options. Our second question comes from Mums Finance. Mums asks, what must I analyze before buying an option? Well, Mums, my own approach is to decide, of course, what individual company, ETF, or index you want to buy an option on. Now remember, buying a call gives you the right to buy the underlying, while buying a put gives you the right to sell the underlying. So the first order of business is to decide if you're bullish or bearish on the underlying you choose. There are many factors and different approaches to forming an opinion on the underlying: fundamental research, technical analysis, a broker's opinion. Decide what approach is best for you. Then once you've come up with an opinion on the underlying you'd like to take a position in, the next step would be to decide what option choice might be most appropriate. Now, you'll find lots of valuable option information at our website, optionseducation.org. You can also reach out to our investor services group at options@theocc.com. That's options@theocc.com. I hope this helps you get started, Mom's Finance, on your road to investing with options. Thanks to you both for today's questions. Keep them coming. We'll look forward to answering more questions next time on Industry Happenings.
It's time to break down the latest option strategies. It's time for Strategy Spotlight.
Joining us today on Strategy Spotlight is our friend, Dan Sheridan, founder and CEO of Sheridan Options Mentoring. Welcome, Dan. Thanks for joining us.
Glad to be here, Joe. Always good to talk with you.
I think we can have some fun today. I think you and I both take a lot of pride in basically getting the word out about options. And our approach today, we want to speak to our listeners who are really just considering to maybe start the use of options. So let's start with a blank canvas. This discussion really is going to gear toward folks just getting started. Do you think all investors, Dan, should consider listed options in their portfolio?
I think so. But again, it's talking to somebody like yourself, Joe, that have been trading options for 30 years and see the benefits of it. And to me, people should be arrested and put in jail if they don't use options. So I don't know if I'm the best person to ask that question to, but having traded it my whole life, I think that options are almost a must for people to start to learn. But I totally understand the environment out there. Some people are maybe scared to learn new things, right? And in most people's world, stocks is all they know about, or stocks is maybe all they've been exposed to. And in their world, maybe their season that is conservative, right? Or the way they've been doing is conservative. So I think it helps that people are open-minded, right? Because even though I think options are far superior to trading stocks for many reasons, you first have to have a discussion with people and just kind of go slowly with them, because people are slow to change. Wouldn't you say, Joe? People are slow to grasp new ideas. Life is too busy, right? If I say, hey, Joe, you've been eating Italian food. Hey, I got some good food. Dan, I don't have time. I eat my pasta 3 times a day. That's all I need, right? And if I say, hey, Joe, I'd like you to try some good Indian food, there's a process there, right? And not everybody's open to change, but I think options are the most effective investment tool out there by far.
Well, you raised a couple good points there, Dan, as you always do. So
about the food?
Yeah, that was one of them. Yes,
that was one of them. Yeah.
So let's assume that our investor does have an open mind, and we go back to that blank canvas and is willing to consider options. How would you suggest that the person just getting started begin? Walk us through, if you would, a pretty detailed process.
Yeah, and I think some beginning thought processes are, again, we're making an assumption maybe. Are we making an assumption, Joe, that maybe we're talking to somebody that has familiar with stocks and has maybe traded a little bit, or maybe has some exposure in the retirement account with a few stocks? Or are we maybe making the assumption we're dealing with someone who doesn't even know what a stock is? What kind of assumption would you like to make here?
I think most of our listeners are investors, maybe not in the option space, but certainly investors. So let's go with the former.
Yeah, okay. So you're dealing with stock. One of the problems you're dealing with in the initial conversation, right? If I'm dealing with somebody in stocks and saying, hey, I'd like you to consider a new ideology, the first thing they might say to me is, hey, Dan, can you pull up a price chart of SPX or something? And I'd say, well, what do you mean? Dan, look at a price chart over the last, 4, 5, 6 years. Dan, we've just gone up. We're always going to go up. In other words, it's just gone straight up. So you're dealing with that, right? Hey, we've been making money. If it ain't, you ever hear the expression, if it ain't broke, don't fix it. So people doing stock over the last 4 or 5 years has gone straight up. So the first thing I would do is talk to the person about, number one, I've got a way for you to participate on the upside, with much less money, because you can start the discussion that, buying 100 shares of Apple, when Apple's at $174, it's like $17,000, right? Buying 100 shares of IBM, $15,000. Most people's wallets don't have that hanging around. But the way to get the people to move over is saying, the most simplest way would be say, hey, Mary Ann from Iowa, Mary Ann has 100 shares or 50 shares of a stock, right? Maybe IBM, or 100 shares. Say, hey, Mary Ann, on paper, right? On paper means a simulated trade until you know what you're doing. Go simulate and buy a call option, right? And I would probably advise that they do some type of a leap option, because you want to link up with their current experience, right? If you're buying stock, if you're dealing with someone who's buying stock and you want to talk to them without freaking them out, right? If you talk to someone who's just buying stock and you say, hey, I got a butterfly trade for you. What are you doing? But if you're buying stock, what are they telling you? Hey, I'm a little longer term investor. I'm buying IBM for the next 2 or 3 years, or Apple. I think it's going up. Well, now, hey, let's stay with that investment objective, but say, hey, I've got a cheaper way to participate and make the same money and make a much better yield. So you're talking with them, someone who's eating pasta 3 times a week, how to make a better pasta.
Let me interrupt for 1 second. 2 things. If you would define what the leap is, and then also maybe take IBM as an example, and tell us, how much money you may have to commit to taking on a long position.
Yeah. Well, let's take. Okay, so IBM is trading at around $150. So alternative one is, hey, I want to buy 100 shares of IBM. It's trading at $150. It's going to cost me $15,000.
Right.
So if IBM goes up 1 point from 150 to 151, I make $100 on my $15,000 investment. Is that good? Anytime you make money is good, right? But what's the yield on that? Well, the yield would be 100 divided by 15,000, 0.006, right? Is that about right? Whatever that. I mean, it's 1% of 15,000 is 150, so it's under 1%.
Right. Minuscule. Yep.
Minuscule, peanuts and Cracker Jacks. Well, you go to them and you say, I got an alternative for you. Let's go to IBM and let's look at kind of a longer term play, right? So maybe I go out to, let's say, let's deal with, I'll just pick an option here for you, Joe, but let's look at the January 8, let's see, what year are we in? 2017. So let's go to January, let's go 437 days out by a January
2019.
January 19 would be the expiration, but the year would be 2000. Wait, let me see. January 18 in the year 2019, right?
Yep.
So I'm basically saying, okay, your universe is buy 100 shares of IBM for $150, 15 grand. It goes up $1, and you get some bird seed, right? And especially if you're maybe a younger investor that is looking for a little more growth, your alternative is, I'm going to go in IBM, and with IBM at $150, I'm going to go in and buy an in-the-money option, let's say at a strike price of, so I'm going to call it a stock surrogate, an option that kind of moves like stock. And in the world of options, we would call that an in-the-money option with a delta near 90. Now, if you want me to explain all that, I would, but at least the example would be with IBM at 150, right? We're assuming people know a little bit about options, Joe, in my discussion.
Makes sense.
Here.
Yep.
Okay. So with IBM at 150, I can buy a 120 call that expires January 19th in the year 2018, 437 days from now. I can buy it for basically $31, right?
Yep.
$31. And the way the delta is and how it moves, if IBM goes up $1, I'm going to make about $90, a little less. But let's go through this exercise. In other words, we said if we buy 100 shares of IBM, it costs us $15,000. IBM goes from 150 to 151. We make $100 on $15,000. That's less than 1%. Alternative, IBM's at 150. I'm going to buy a 120 call, and I'm going to buy a 120 call at $31. It's going to be at the Jan 19 expiration in 2018, 437 days away for $31. So now my investment is $3,100 versus $15,000, 5 times less.
Yes.
So if we go up $1, even though I only make $90 versus the stock of 100, instead of making $100 divided by 15,000 on the stock and making less than 1%, now I'm making $90 divided by $3,100. Now you're talking almost 3%, right?
Exactly. A far greater return with far less capital committed. So that's,
with
I think,
5 times less the capital. And so with that, so you have plenty of money left over to buy your wife a nice fur coat, gold earrings, gaudy shoes, the whole 9 yards. I'm joking. But it just gives people an alternative. And I think especially as you're getting into the millennials, right, that maybe don't have as much money as the baby boomers, this would be right up their alley. They can play the stock market game for far less money and get better yields. Now, does it excuse them from not learning the craft? No. I mean, I think this is a good, quick way to get somebody who's used to stocks, get them in the market. And what I would suggest is the way to get into options to go one step further, Joe, would be, hey, let's say a stock that I'm most familiar, pick a stock that you have in your retirement account or maybe in an industry that you're familiar with, and go start out doing a paper trade, a simulated trade, one contract, get used to how it works, and then go buy one contract, right? One contract here would cost $31. It'd be $3,100, and follow it along, right? And you can kind of see how it goes, right? But that's how I would get in. Get in with the stock you're familiar with. I mean, the perfect thing would be, let's say somebody had 500 shares of IBM. They're already looking at it, buy one leap call, in IBM, and it would give them, and I think that's a way to get somebody that's already eating pasta. You don't come in by saying, hey, you know what, let me teach you about Indian food. You're starting out to get their favor or to get their confidence or to encourage them by saying, let me help you make a better pasta, right, of something they already like. So I think that's a real baby step to dealing with somebody and getting them in the ballpark. If you meet somebody and you start talking about iron butterflies and stuff like this, they'll call the police on you, right?
As they should.
As they should, right. So I think this is a good way to do it. And then the other thing is, when you're going through it, if I was teaching beginners, I would put together, a baby step portfolio, right? If I'm dealing with beginners, I might put together, hey, let's talk once a week or once a month, and let's just deal with this issue of leaps. And then once we've done this 3-4 months, then I would go to step B. Hey, what if we're trying to get a little more income, right? We're already making better yield on the leap or the stock surrogate versus the stock. But now let's talk about another concept. How can we get even more return, right? And then you get into the concept of, hey, maybe selling a call against that leap, right? And I think that would be a baby step to, into some of the other strategies. So I would start with the leap, then work into, same example, IBM, saying, okay, IBM's at 150, okay, and IBM doesn't move up doesn't move up as fast as an Amazon, usually, or a Netflix, right? Or a Tesla, or a Facebook. It moves up kind of like an overweight elephant, right?
Too much pasta.
With too much pasta. I mean, it kind of moves up, but it's not moving up at any breakneck speed, generally. And IBM hasn't moved up much over the last year. IBM was at a high of $182. Now it's down at 150. But again, it hasn't moved like some of the other ones. So I think this would be a good one to explain, hey, if you like IBM over the next year or two and you're convinced, which it's true, it doesn't move up as fast as Amazon or what the other ones, now you work into this discussion of what if we sell a call against it, right? So after we get them comfortable with the leap, which I think would take practice, let them do 4, 5, 6, 7 leap trades. Once they're comfortable, now you bring in the concept of, hey, let's sell a call against it 30 days out. And on a stock that doesn't go up too fast, it's a way to maybe increase our 3% yield, maybe 1% more every month or 2% more every month. So, and so now you're kind of slowly bringing somebody in. But I think, let me just say this one, at least a final thought on this part is, none of this is going to happen to me if it's purely academic. In other words, I mentor students on live trades all day long. And to me, you can go over the concepts. You could go on camping trips together and talk about it. You could write books on it. If the person's not doing it, if the person's not making the pasta, it's stinking useless to me, right? And so if a student doesn't put on 3 or 4 leap trades in paper or live and at least attempt to make the pasta, going to that next step of selling a call, you might as well be in Magic Kingdom or on the moon. And I think what I've seen with students is, unless there's some actual practice, you're dealing with these theoretical astrophysical concepts, in my opinion.
And
I don't know if that makes any sense at all, Joe, but you're one of the few people who listens to me, Joe, so I'm happy to talk.
Well, you lost me a little bit with the astrophysical, but we'll
I lost
discount.
myself too.
We'll discount that. No, I think, Dan, two great approaches for somebody just starting out. And, we were talking IBM, but obviously it's not a recommendation on IBM. It's just, it could be XYZ, our favorite stock
XYZ,
here at OIC. It's just the idea of the concept, buying a longer term call and watching it, or, if you've already got a portfolio, potentially selling a call to generate some additional income. Both ideas make a lot of sense. Let me ask you this, Dan. How can our listeners, reach out to you if, they're interested in some of what you do at Sheridan Mentoring?
Yeah, if I could add one more thought to what we were talking about, if that's okay. They could reach out to me at dan@sheridanmentoring.com, and I'd be happy to answer any questions. We have some on Tuesdays and Thursdays. We do something called Sheridan Mentoring TV at 1 o'clock Central, where I'll be doing it today, spend 20 minutes going over trades, some live trades, talking through different concepts, just free stuff. And also we usually do 1 webinar to 2 webinars a month free for the public. So if you get on our mailing list, you can get access to that. But one thing I just want to say is this. What we talked about today with Joe was directional trading, correct? Or in some essence, right? If somebody buys a stock, Joe, they have an opinion, right? You don't buy a stock unless you think it's going up, correct?
Right.
So there's an opinion and there's directional. And so when we talked mostly today about buying a leap call, that's directional. And I think being directional with a long-term view is appropriate, right? Being directional with a short-term view, where's the market going to go from month to month, I think that's a very difficult game, right?
Agreed.
To pick so on a month, but what I do mainly in Sheridan Mentoring is, do we focus on, kind of the retirement income and kind of a long-term, hey, we think IBM's going up over the next 2 years. How do we generate the most monthly income and maybe buy an in-the-money call like a leap and sell a call against it? Yes. And I think that's appropriate. But the main thing, just to kind of throw another thing out there at folks for them to at least explore, and as Joe could mention, I think the Options Industry Council is a great site to get a lot of the different materials, at least that I think the information is accurate, right? A lot of sites you go to, I'd say the information is iffy. But what I focus on people all day is I just work with people that are probably between the ages of 40, 45, and 90, and I show them how to put on non-directional trades. So we're not looking at which way the market's going. We don't start with that premise because I think it's very difficult when you're making trades on a monthly basis, which way the market's going. So we set up trades, non-directional trades based on probabilities and time decay, and I just simply show them how to manage the risk. That's what I do 95%, is try to help people generate some extra income, since most people in that age, 45 to 90, are getting zero yield almost, right?
Exactly.
And really, at that age, people are just looking for a little extra income so they don't have to dip into the savings. So I work with them on non-directional trades, how to put these repeatable trades on every week or every month and make some money. And that's what I do. I mean, it's so I'm not, when you start, when you get into that game of, hey, I think IBM's going up over the next year or two, and I'm going to have a long-term approach and do the leaps like we talked about, that makes sense. But the other part of your portfolio, to diversify, you shouldn't have all your money betting the market goes up, because it's not always going to be that way. We're not always going to have sunshine and the market goes up 4 years in a row. And so this kind of non-directional, repeatable trades that a retail trader can do every month. They don't have to know Fibonacci. They don't have to know where the market's going. And they can put these trades on, more repeatable trades. That's something we do. But what I would suggest to people, go to the Options Industry Council site. There's other sites also. And again, walk before you can run. Deal with a long leap. Then maybe selling a call against it. Then broaden out. But at each step, put a few paper trades on. And then maybe a one contract live trade, because it's got to get in your bloodstream. So anyways, didn't mean to be long-winded there, Joe. I'm done. And anything else, I'd be happy to help out.
I think just one last time, Dan, if our listeners want to reach out, how do they get a hold of you?
Yeah, Dan at SheridanMentoring.com. You could go to SheridanMentoring.com, and what I would recommend is just sign up and get on the roll there, so you can get some information. Well, at least you can see some of the free stuff that we have. Tuesdays and Thursdays, the Sheridan Mentoring TV, and just get some of the webinars that we have. We have a free webinar Thursday I'll be doing, and that way at least get you into this type of thinking and how we're looking at trades, and it'd be baby step way for you to come into the world, the wonderful, wonderful world of options.
And I think on that happy note, we should wrap it up, Dan. The wonderful wide world of options says thanks for joining us today on Strategy Spotlight, Dan. Appreciate it.
It's time to meet the movers and shakers from the world of options. It's time for Profiles and Perspectives.
Joining us today on Profiles and Perspectives is colleague Ed Modla, Head of Investor Services at OCC. Welcome, Ed.
Thanks, Joe. I'm glad to be here.
Hey, why don't you take a minute to tell our listeners a little bit about your career path and how you landed up at OCC?
All right. I'd be glad to, Joe. My career started back in the late 90s. Outside of graduating with my degree in finance, I went right to the trading floor and worked for Blair Hull and his options trading team on the floors at the CBOE and CME in Chicago. And that's where I learned options. That's where I got trained. And one of the things I remember early on in my career there, one of the senior traders that was training me said, Ed, listen, you're going to know when you're right for this business, because sooner rather than later, you won't think of it as a job. You won't think of it as a career. You'll think of it as a lifestyle, meaning you think about it 24/7. It never leaves your mind. It's what you do, and you absolutely love it every minute of the day. And it didn't take me long before I realized exactly what he meant, and that was true for me. So I stayed on the trading floor for as long as I could while there was still activity down there until the early 2000s, then went off the floor, traded electronically for a number of years, and like a lot of traders, you like to go out on your own a little bit and trade with your own capital, and I did that for the better part of a decade. I always knew I'd end up in the service side of the business sooner or later, and several years ago, at the end of 2014, I joined up with the OCC and OIC team out here in Texas. That's where I reside now in Dallas, and manage the OCC Investor Services team, and glad to be here.
Well, we're lucky to have you. I mean, that Blair Hull group, what a strong group back, on the trading floor. So, a great pedigree there. Before we get on to talking about the whole group and investor services, why don't you tell our listeners exactly what the OCC is?
Sure. I'm glad you asked that, Joe. OCC is a little bit misunderstood or not well known in the industry, but OCC really, as the clearing corporation, is the backbone of the industry that clears the trades. Effectively, to give a little background, when trades are executed on the exchange, those executed trades, along with the details, the price, and the buyer and seller, are communicated to OCC, who clears the trade, which means they sever the tie between the buyer and seller and manage the risk of the clearing firms that are on either side. So OCC really acts as the backbone to the industry and provides tremendous risk management. And options trading as we know it today couldn't exist without OCC. So they perform a very important and essential role in the options industry.
Indeed, they do. And I hope you got that, listeners. The OCC really is the differentiator when it comes to listed options. It takes the counterparty risk out of any of those 16.5 million contracts that trade each day. Well, thank you for that, Ed. How about if we start to focus on your team at OIC and the Investor Services Group that includes Bill Ryan and Mark Benziquan? Tell us what the three of you focus on at Investor Services and how our listeners can benefit from the offerings at OIC and your expertise.
Sure. As you mentioned, it's a small team of three of us, but between the three of us, we each have 20-plus years of experience in the business, so we have a lot to offer. I'd break down our roles into two pieces. The first one, working on the OCC side, we support every product that OCC clears, and that's in the options space and then the futures contracts that OCC clears. So we are in constant contact every day during the day with exchanges, data vendors, trading firms, asking questions about OCC products, whether it be contract adjustments or listings or strike prices, data that OCC provides, volume, open interest. We're working with these industry professionals all the time to make sure that they have their questions answered, and OCC has the products that we clear supported. The second side, or the second part of our role, is with OIC, the Options Industry Council. We provide education and support to the listed options space and equity options education. So we are frequently in contact with investors. Those could be trading firms, individual investors, or even financial advisors who are helping out their clients, answering questions about options. Those could be strategy questions. Those could be risk-reward questions. So every day we're in the office, we're dealing with just about as many people as you can think of in this industry when it comes to professionals, individual investors, and anybody else that wants to reach out to utilize our services. We're here to help.
You guys have a full plate, that's for sure. What are the hours
Absolutely.
at Investor Services?
Our hours generally are guided by the exchange hours, open market hours. So you could say we're open Central Time 8 to 4. So we're here about a half hour before we ring the opening bell, about an hour or so after the closing bell sounds. If the exchange happens to have short days or holidays, we will follow suit with that. But our general hours, a little bit before the open, a little bit after the close. That's our business hours.
Okay. And how do investors reach you, Bill and Ed?
Well, if there are any professionals out there, you can call us. We take phone calls from the professional community during those open hours, and that's at 1-888-OPTIONS. But our services are available to anybody in two other formats. For any individuals out there that like to reach out to us, on the OIC homepage on the right side, you can see a link to live chat and email. And those are the two venues that individuals can contact us by. The live chat is open during the trading hours, as I mentioned before, but we do take a little break during those lunch hours. So from 8 to 4, but with a break at the 11 and 12 o'clock hours, you can hit the live chat button, and you'll reach one of us three. You can also send us an email. We respond to these emails diligently, and we have a target to have every single email that we receive responded to within one business day. That email address is investorservices@theocc.com. But again, on the OIC homepage, you can see that link on the right side of the page.
That's dynamite, Ed. I may ask you for that info one more time, but you've been in the business a long time. Why World of Options is all about offering our audience, different tools, resources, and knowledge. You want to offer a few of your favorite tools or resources that investors should know about?
I sure will. There's a lot of them on the OIC site. What I hear from investors, first of all, is the options quotes page under the tools and resources section is very popular. And I think it's because the data is presented in a very options-friendly way. You can enter your stock symbol and choose your expiration date, filter strike prices, and see the bid-ask along with all the Greeks, including implied volatility. And those quotes are on a delayed basis, but it's a very popular page that options investors seem to utilize We're also getting a lot of positive feedback on the new options strategy builders that we have in the same section on the OIC site. Right now, these are calculators for covered call and collar strategies. You pick your stock, and the calculator will then draw up for you a risk profile showing you returns and risk. You can click and drag the stock price to various levels and see how that affects your trade. So those are two very popular strategies that investors use, and we have those in the strategy builders. Personally, I'll name one more for you, Joe. The strategy screener, which is in the advanced concepts section of the OIC website. I think this section is invaluable. There are several dozen options strategies that are listed in this section. You can filter them based on your market outlook, bullish, bearish, or neutral, whether or not you want to generate income. You can also filter for implied volatility, whether you think it's going higher or lower, and get a list of select strategies that fit your outlook, what you filtered for. And each of those links to each of those strategies has a full-page description of what the strategy is, the motivation, a risk-reward profile, a profit and loss graph, a very thorough description. And, of course, all along, keep in mind, if you're using these resources, you're going through the strategies page, and you have questions, feel free to reach out to us.
Hey, what was the name of that last idea you offered?
Reach out to us. That's what we're here for. We enjoy helping out people, and that's what our services are all about. So if you have questions about anything you're using on our website or any options-related questions at all, you reach out to our team, and we'll be glad to help you out.
Two things. Did you say that one tool was the strategy screener?
Yeah, it's the strategy screener.
Okay.
In the advanced concepts section of the OIC website, we have a strategies page, and you can screen through several dozen strategies based on market outlook, market bias, market opinion, and you can get a short list of strategies that fit your outlook and then read a thorough description on each one of them.
All right, that's great. And just last thing, one more time, if you would offer our listeners how they can reach you, Bill, and Mark.
Sure. 3 ways. The first one is exclusive to the industry professionals, and that's at the 1-888 options number. We're open 8 to 4 Central Time during trading days. For individual investors, 2 ways you can reach out to us: live chat, similar hours with a break during the lunch hours, and you can get to live chat through the homepage on the website. And then the other way individual investors can reach out to us is through email. Send us an email to investorservices@theocc.com, and we'll get back to you within 1 business day.
Fantastic, Ed. That was a fact-filled 10 minutes. I appreciate you joining us today on Profiles and Perspectives.
Glad to be here, Joe. Thanks for having me.
It's time to upgrade your options toolbox with cutting-edge trading platforms, devices, and information. It's time for tools, resources, and good reads.
In today's tools, resources, and good reads, let's start with a couple OIC tools and resources you really should know about. First, check out the new covered call calculator at optionseducation.org. Go to the Tools and Resources bar, 321. Go to the Tools and Resources bar on the home page and click the first choice, Option Strategy Builder, to find the new covered call and collar calculators. Also, check out our quick-hitting video series by entering videos into the search bar. The video series link will appear. Click it and enjoy lots of information as well as strategies in these quick-hitting video. And the last resource I'd like to mention is also found at optionseducation.org in the Tools and Resources drop-down bar. It's the most active volume updates on individual stocks, ETFs, and indexes. You'll find this link at the bottom left side of this drop-down. We'll wrap up with a great read I may have mentioned before, Jim Cramer's Confessions of a Street Addict. It gets into the mind of the Wall Street trader. A great read, absolutely one of my favorites. That's today's Tools, Resources, and Good Reads.
It's time for a nostalgia break. It's time to take a look back.
Today's Looking Back, we'll take a look at year-end market performance in the S&P 500. Since 1950, the SPX has gained an average of 3.9% in the fourth quarter, advancing 79% of the time. Now, in the past 25 years, the S&P has averaged an even better 4.4% gain in the fourth quarter, also 80% of the time. So 4 out of every 5 years. Now, since World War II, and obviously we're going back a ways, 16 times the markets have advanced in August and September, like this year, typically very difficult months for the market. And in the fourth quarters following those August and September gains, the markets have advanced an average 2%. Now, the reasons for advances and declines in the market are always difficult to pinpoint. Advancing fourth quarter market excuses include ideas that money managers need to catch up to the averages, holiday spending is good for the markets, the January effect where new capital is committed to the market starts in December, or maybe just dumb luck. As I mentioned, it's often hard to say what drives the markets. So we'll leave you with the trend is your friend, along with this look back at fourth quarter market returns. Thanks for joining today's Looking Back.
Investors should know that options involve risk and are not suitable for all investors. You should not enter into an options transaction until you have read and understood the risk disclosure document, characteristics and risks of standardized options. This brochure is available by visiting www.optionseducation.org or by calling 1-888-OPTIONS. OIC makes no recommendation with respect to any financial firm. OIC does not make any warranty as to the accuracy, usefulness, timeliness, or the continued availability or existence of information created or maintained by others. Multiple leg strategies involve multiple commission charges. Opinions and strategies expressed by others are not necessarily those of OIC, nor does OIC endorse, warrant, or guarantee products, services, or information described or offered by such firms. Commissions, fees, margins, interest, and taxes have not been included in any of the examples used in this show. These costs impact the outcome of all stock and options transactions. Consult your tax advisor about any potential consequences. None of the information presented in this show should be construed as a recommendation to buy or sell a security or to provide investment advice. You've been listening to the Options Industry Council's Wide World of Options. If you have questions about anything you heard on today's show, email Joe Burgoyne at options@theocc.com. Or you can call OIC's Investor Services at 1-888-OPTIONS. Interested in connecting with OIC on social media? Like the OIC page on Facebook. Follow them on Twitter at options_edu. Or join their group on LinkedIn. Thanks for listening, and be sure to check out our next episode of the Wide World of Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.